Welcome to the Capital Spreads Weekly Look Ahead. Today is Monday the 3rd of December 2012 and a good start to the month of December, of course. Lots of questions on everyone's lips about whether this is the commencement of a Christmas rally, and if you look back historically, 28 years of the FTSE, 25 of those have seen December turn out to be a positive month for the index. So historically speaking, it's always a very bullish month of the year, and it would seem that the market has commenced in that fashion so far, certainly today. But of course the question remains whether the headwinds will prevent serious gains from being had, or whether we will actually make a gain at all. But for now, things have started quite well. FTSE's at 58.80. The Dow has opened positively at 13,075. Euro is still above that 130 level at 130.35. Cable doing well at back above 160, 160.70. Gold has suffered a little bit, maybe perhaps the strength in equities just bringing a few people out of gold. It's at 17.14. Brent has also benefited slightly from the risk appetite. It's at 112.20. So Monday has started well, as mentioned, and already we have seen manufacturing data from across Europe and in the UK. In the UK, the manufacturing PMI survey came in better than expected, which is a bit of a surprise. It's still below 50, which indicates contraction for the sector, but nonetheless rather good news. But of course, a different story across the continent, where the numbers were pretty much as expected, pretty much flat, but also some coming in slightly negative, some of those countries reporting. So not such a good picture over in the Eurozone. We also get very shortly actually the US ISM manufacturing number, which is expected to remain above that 50 level, but there could be some softening there, because the recent Beige Book in the US, of course, did actually just indicate that a few areas were seeing softening manufacturing activity, so that number could possibly come in a little bit weaker than expected. And that PMI survey theme continues throughout the week. Tomorrow we've got UK construction data, which is again expected to be above 50, but also of interest, something that normally we wouldn't focus on, is the Bank of Canada making their interest rate decision. Now that's of interest purely because Mark Carney, who is the governor of the Bank of Canada, has been given the job to take over from Sir Mervyn King in the summer next year at the Bank of England. So here UK investors will probably focus a little bit on what he has to say and what he does over in the Bank of Canada before moving across the pond to look after our central bank. So no action expected really, interest rates to stay on hold at 1%. But I should imagine that over the next few months into 2013 we'll be focusing a bit more on what Mark Carney does at the Bank of Canada before coming here. Then on Wednesday we get more PMI data. It's the services sector this time, so across the continent, the Eurozone services data. And here in the UK we get the PMI services number. Now that's expected to bounce from last month. It's expected to go above 50, remain above 50. It's been consistently above 50 actually, showing expansion in the services sector, but it's expected to bounce from its lowest level since December 2010. But really the highlight of this week probably, and also on Wednesday, is the Chancellor's autumn statement. Of course, with the sluggish growth that we've seen in the last few years and his austerity measures, his target for the fiscal tightening, bringing the debt down and reducing the deficit by the end of this Parliament, is really in doubt. And he's made it perfectly clear that he's not going to waver from that. He still wants to hit his target. Now, because growth is going to be downgraded almost certainly, it means one thing. Well, it means two things. It means higher taxes, it means more spending cuts. So we can expect lots of sort of austere announcements from the Chancellor, not wavering and things like that. What I suppose people will be focusing more than anything else is if it will be a gaffe-free statement, because of course in his various autumn statements and budgets in the past, there's been various sort of foot-in-mouth type moments, such as the pasty tax and things like that. So lots to focus on Wednesday. Then, of course, we get, being the beginning of the month, we get US ADP payrolls. They're expected to come in at 125,000. We also get the US non-manufacturing data, which also is expected to come in above that 50 mark, suggesting expansion. Then on Thursday, again being the beginning of the month, we get lots of central bank decisions. So we get the ECB and the Bank of England making their interest rate announcements. Not really any action expected from either. But before those decisions, we get Eurozone GDP and the UK trade balance. And then we end the week off with the non-farm payrolls. It'll be the last for 2012. That is expected to come in at around 95,000, bit of disruption from Hurricane Sandy, of course. And then we cap the week with US Michigan confidence in what will be a very busy week, as we're not far from Christmas now. We're not far from the end of the year, a year that's been particularly turbulent. It's been a very tough one for many, but a very busy week this week. So as ever, do give us feedback, media@capitalspreads.com.